Proud supporters of Africa this week. Engine, with us, you are number one.
Business Unity South Africa and the Confederation of Indian Industry have been discussing shared experiences on how South African companies can successfully navigate the Indian business environment. Robert Applebaum, partner at Weber Wenzel Attorneys, spoke to us about doing business in India.
The perception is probably right, but that's not the Indian fault. That's the opportunities in India that Africans and South Africans haven't as yet been taking advantage of.
And we're not taking advantage of them as Africans because we're not industrious, or because the environment in India is very constrained?
I think perception. I think there's a perception that it's difficult to do business in India. It's not as difficult as one thinks. Mm-hmm. There's some barriers to entry, but the barriers to entry everywhere. Yeah. And maybe the size is just daunting.
How restrictive is the environment? I mean, we're told that, this 9% growth we're seeing in India is largely as a result of the deregulation of the economy. But those on the ground say the economy isn't as deregulated as we think. There's still a lot of government bias in favor of local businesses.
Oh, there's no doubt. I mean, there's a lot of regulation to start, and there's some protectionism. So I'll give you an example. Yeah. In for example, the retail industry. So a foreigner could own a mass market could go in, and a foreigner could own a wholesaler or something of that nature. Yeah. If one wished to own a ShopRite, Checkers, or Pick n Pay or Woolworths, something in India, that's prohibited for a foreigner. In relation to a single retail brand, so assuming you went in and you had a brand such as an Adidas, whatever, the foreigner could own 51%. So that's the one. I mean, in some of the areas it's very regulated, right. In others it's not.
I think for many investors who go into a new market, particularly in greenfields projects, they'd want to do it on a joint venture basis. But we're told this is where the government is particularly intrusive. They don't support the idea of those joint ventures.
No, on the contrary, I think the opposite, in fact, is correct. When we advise any client and going into India, we normally suggest find someone who understands the environment, someone that's trusted, and go along with them. Very rarely would you find someone trying. There have been a few South African experiences that have been bad, but those have been stubborn people not wanting to choose partners or choose the correct partners.
What about incentives for investments by way of tax waivers, reduced import duties, those sorts of things? How beneficial is it for anybody bringing or starting a new kind of business in India?
They are easier. The incentives in India are easier to access than ours. They're not huge. So, for example, for SEZs, there would be incentives. In the power area right now, there are incentives. If you're going to go out into some rural area, there'd be incentives. So, but I mean, the fact is that it's a huge economy and a huge population. Therein lies a huge incentive.
Kenyan consumers brave turbulence in the business environment to increase their uptake of new loans, leaving a silver lining around the dark clouds that have been gathering over the economy since the onset of the drought in March. Edwin Wanjawa, CEO of the Consumer Federation of Kenya, explained the latest statistics on consumer behavior in Kenya.
The cost of living has been increasing for the last 9 months. The last statistics showed that the cost had increased from June, which was 14.95%, to 15.5% in July. And the fears are that inflation is going to continue to increase. And it has had a big impact on the cost of living and on the cost of food.
All right. Now, what impact does that have on the financial industry in general? Because banks have now increased their loan books and their half-year results demonstrated very good performance. But there's now fear that we're going to see non-performing loans increasing. Certainly the portfolio has increased by 3.9%, and there's a fear that there's going to be a default. And going forward, people may not be able to borrow, and yet their costs of living and prices are changing around them, and they may need a little bit of that safety net.
Well, that is true, but maybe a little background will help. For instance, in the Kenyan banking market, if you went to a bank and took a loan, and you're a favored customer, they'll charge you 13.96% as interest. If you are saving an equal amount of money in that same bank, they'll pay you an interest of 1 0.37%. So therefore, the problem here is that the banking sector in Kenya, I think, has failed to play its role of providing affordable capital to Kenyans. So it is true that the banks have been making profits, but I'm afraid that those profits, if they continue to lock out most consumers, those profits will not be sustainable. In fact, a large number of Kenyan consumers, many professionals, actually don't do business with the banks. They do business with what we call SACCOs, small cooperative societies.
Yeah. What about business and how business could respond to the changing environment? I mean, ultimately, business have been able to honor their debts and loans to the banks, but if the environment gets more constrained, we may see business having to shed jobs, having to slash wages just in order to cope. What's your view?
My view is that businesses have been able to cope up to now because what they have simply done is to pass the costs of increased business to the consumers. Unfortunately, what that is going to do is that we are going to have a shrinking consumer market. And eventually, the profits they're making now, they will not be able to make. My thinking would be that what businesses should do would be to share this increased cost with the consumers rather than simply pass it over to them, because if they do that, then their business will not be sustainable.
We celebrated Women's Month in South Africa this week with a Pan-African outlook on women in private equity across Africa. One of the women taking the lead on this front, Ngozi Edozian, head of private equity from Actis in West Africa.
You can look at that on a couple of levels. I mean, firstly is women within the private equity space, working in private equity firms. I think you will find quite a number of us, because I think the work that we do in some ways is very uniquely aligned to interests that we have, because the work that we do has a bit of operational experience, it has a bit of investment experience, and it certainly has strategy. And so as you begin to look at the pipeline of women coming into to private equity, you will find that you do have people that have come from investment banking, from operational fields, but also, quite frankly, from consulting. So I look at it and I say that the more there are women in the pipeline who come into the workforce in those areas, the more you will have women in private equity. And certainly if you look at those, the major private equity players operating even in Nigeria at present, and on the continent, I can certainly think about 4 of the companies who have women at very, very senior levels in their firms. I think the second part of your question is going towards actually perhaps the businesses that we invest in. Is that correct?
Not yet. I want to find out, you know, obviously finance is a specialized skill. You all have degrees in accounting, business science and the like. And it's generally perceived that not a lot of women are churned out of this particular industry. Certainly when you look at women who lead listed entities across the world, this is the one area that's not changing. The boardroom is not changing fast enough. Where do you acquire the skills in terms of having women participating in private equity?
Well, I think, as I said, it comes down to the pipeline. Generally, you know, if you talk about the skills that we do require, financial analysis, accounting skills, you're actually finding that there are very, very many women who are beginning to go into those fields, particularly in the generation that is below myself. So if you look at the US business schools, if you look at the international business schools, if you look at those who are studying accounting degrees and going into finance, you're going to find a significant proportion that are women. And I think the issue, as I mentioned earlier, is about the pipeline. And I think further down the line, we are going to see quite a number. But certainly, if I look at my firm, we do have quite a number of women in the firm, particularly at one level below mine. Right. And so I would expect that we're going to actually see quite a number coming through. In Nigeria myself, as I said earlier, if I think about some of our competitors, certainly there are 3 of us here who are actually leading the private equity investing for our firms in West Africa.
Let's talk about the businesses in which you invest, because some would say, as women, you should have a bias towards female industries, maybe hospitality, media and broadcasting. I'm just throwing it out there. But others would say all business sectors need investment. We need FDI in Africa, and it doesn't really matter where it's going. How do you approach it?
Well, listen, I think to make a good private equity investment, it's about the business. It's not necessarily about the gender of the people who are actually running the business or who may have founded the business. And we tend to look for businesses that are in high growth sectors, businesses that are fundamentally on a growth wave in consumer industries or other types of sectors that are important in emerging markets. Business services, certain industrial areas, and certainly within financial services. So we look first at the fundamentals of the business. And that can include, indeed, the management. And if it so happens that the management of that business is female-based and they are very good at their work, then that becomes a benefit as well. Okay. But private equity is not about gender. It's about the quality of the business and the type of risk and the returns that you expect to actually get in investing in that business.
Research by the United Nations Development Programme shows that the returns on investment in women are much higher than men, particularly as women are more likely to share their gains in education, health and resources with their families and their communities. Liz Zambonini, CEO of the Hope Factory, spoke to us about investing in women.
Well, theirs is based on research, but I can also just tell you, after being in this industry now for 10 years, that first of all, there's a far higher interest from women in being entrepreneurs than from men. I mean, the Hope Factory's been running now for 10 years, and we've never said that we prefer women to men, but 8 out of 10 of our applicants are actually women. So to start with, I think there's a far higher interest. I think secondly, the research has also shown that, as you said, women are I don't want to say this and I know it may not be politically correct, but women are more responsible. At the end of the day, they say the woman is left holding the baby, and that's the truth. I've got a lot of women who've come through our program because they are mothers and they have to provide for their families, and they are now single mothers.
So necessity is the mother of all invention, as they often say, and obviously because they need to survive, they have to be creative about their economic opportunities. But that statistic, 8 out of 10 women are the ones coming to look for loans. Yes. You don't really get that feeling when you speak to some of the more structured investors like banks.
Yes, well, you see, the Hope Factory is not structured like a bank is, so perhaps that's why we tend to see more of that. Women actually often look, and they start off smaller, but then they can grow their business. So they maybe not as big a talker as a man is and wants to go and borrow, R500,000. They may be looking for something. They start off smaller. They're probably a little bit more risk averse, and therefore something like the Hope Factory, where they can have investments of 20,000 rand into their business, is something that helps just start things going.
I think that's a hugely contested issue, is development finance institutions and a lot of those kind of bridging agencies tend to focus on the small and medium space. Yes. And yet a lot of women, as you're suggesting, are at the micro level. Yes. What do we need to kind of restructure our way of thinking as financial organizations and say, this is where the base of the pyramid is, and this is where money needs to be channeled?
Well, interestingly, that home-based enterprises are responsible, and this was research done 4 years ago, for 6 billion rand in our economy. So it's not small, and yet it is, I agree with you, completely an untapped market by the banks. See, banks don't actually really want to give loans of less than 50,000 rand minimum. So I do think that we need to relook at that, or we need to have other enterprises like the Hope Factory that are able to provide the solution maybe below that mark, so that they can then move to the banking level.
As the role of business in society changes, it's becoming increasingly important that business leaders are equipped with the relevant and appropriate skills. This is according to Professor John Powell, Director of the University of Stellenbosch Business School.
The MBA never went away. The MBA started as being a general management education program, which put you into the top echelons of business. And although that's not true anymore, the essential values of a good understanding of the mechanics of business, the mechanics of markets, even in some sense the mechanics of the way that people operate in teams is still extremely relevant. And to some extent, while it may not be a ticket to the very top echelons of business, it's certainly a ticket into senior positions.
I mean, why do you think it's important that all business leaders need to have some kind of an MBA or generic business training? Because do you know what? Some people argue the MBA just makes you a jack of all trades and a master of none.
Well, they argue worse than that. Time magazine's July 18 issue really points the finger at the generalization of the MBA graduate in contrast with, let's say, engineering or software skills as being a detriment to capability at the top level. I fundamentally disagree. I think it's illogical thinking. I think it's sloppy thinking. After all, there's nothing that stops an engineer being an MBA or an MBA being a software engineer or a shoemaker or anything else. And if you think about it, you wouldn't ask a pilot to run an aircraft without knowing about aerodynamics. So why would you expect the top manager or middle managers even of a company to try to run that company without the basic managerial skills?